Hey everyone, it's Julie here with TipRanks, and today we're taking a look at a few of the best rated stocks in the last 30 days. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at some of the best rated trending stocks. These companies have been picking up dozens of Wall Street analyst ratings within the last 30 days. So we're going to take a look at these companies, what it is that they do, and what those analysts are saying about the stock's future. We found these companies over on the TipRanks Trending Stocks page. Found under Research Tools, Trending Stocks will show you the best, worst, or most rated stocks within the last 30 days, 7 days, or 72 hours. You can further sort by market cap and sector as well, but today we're just sorting by ratings. And just before we get into some of these best rated stocks, this is a friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. You can download the TipRanks mobile app so you can access all of your favorite investment research tools on the go by following the links in the description as well. Now let's get right into some of these best rated stocks. First on our list in the technology sector is Micron. Trading under the ticker MU, it is currently priced at $116. Year to date, the stock has climbed 36.5% and has gained 9% in the last 3 months, but over the last 5 days has cooled off about 14%. Micron is a semiconductor company that has been around for 45 years. They develop and manufacture memory and storage products that are used in artificial intelligence to train AI models, machine learning, and generative AI, in 5G products to help support 5G capability in consumer devices, networks, and data centers, and in consumer products like smart TVs, streaming devices, and intelligent homes. Just yesterday, Micron unveiled the industry's fastest 2230 Gen 4 consumer solid-state drive. It is called the Crucial P310, and it's going to empower enthusiasts of handheld gaming and users of mini PCs and ultra-thin laptops to store more games and data-intensive content at their fingertips without sacrificing speed or performance. A few weeks ago, on June 26th, Micron shared their third quarter earnings report. They had some big year-over-year growth and both an earnings and revenue beat. Their Q4 and year-end results are due out on September 26th, where analysts are anticipating earnings per share of $1.11, which is a big increase over last year's loss of $1.07. For their Q3, they reported earnings per share of 62 cents, beating expectations by 14 cents per share. They said that AI demand drove 50% sequential data center revenue growth and a record high data center revenue mix. Revenue came in at $6.81 billion. Just last week, we did have a couple of 5-star analysts weigh in on the Micron stock, one of them coming from Goldman Sachs. They reiterated their buy rating on the Micron stock, saying that their confidence was bolstered by recent insights from a management meeting. They emphasized Micron's strengthening position in the high bandwidth memory sector, as well as favorable supply and demand dynamics in the DRAM and NAND markets. They said that despite Micron's year-to-date stock outperformance, they see room for further growth. The Micron stock has 27 current analyst ratings, and 26 of those have come in the last 30 days. The stock does come in as a strong buy, with 25 buy ratings and just 2 holds. And with that strong buy rating, we have an average price target of $169, implying an upside potential of over 44%. Looking at those recent ratings down below, lots of 5-star analysts weighing in on the Micron stock. Our low-end price target is a hold here from Morgan Stanley at $140, which would still be an upside of 20%. Our high-end price target comes in at $225 from Rosenblatt Securities, which would be an upside of over 93%. Our second best-rated stock is DataDog. They trade under the ticker DDOG, currently priced at $119. Over the past year, they've gained 3.7%, but in the last 3 months are down slightly at 0.5%, and they've dropped off in the last 5 days, down 5.8%. DataDog is a software company that provides a monitoring and analytics platform. Primarily used by developers, IT operations team, and business users, their cloud-based platform provides real-time visibility into an organization's IT infrastructure. They help monitor and analyze performance metrics, infrastructure and cloud services, and collects data from various sources. They then use this data to create customizable dashboards, alerts, and reports. Just yesterday, it was reported that DataDog is rumored to be interested in acquiring GitLab. DataDog has been focused on the DevSecOps opportunity for a while now, and adding GitLab's capabilities to its platform could strengthen its positioning by giving it a stronger foothold in the earlier stages of app development. DataDog shared their Q1 earnings report back in May, where they did have an earnings beat, and their Q2 is due out in just a few weeks on August 7th. For that second quarter, analysts are anticipating earnings per share of 37 cents, which would be 1 cent higher than last year. For their Q1, they reported earnings per share of 44 cents, which beat expectations by 9 cents per share and grew 57% year over year. Revenue grew 27% to $611 million, and the company said they had a strong growth of larger customers with over 3,300 $100,000 plus annual recurring revenue customers. Just a couple of days ago, we had a 5-star analyst from Mizuho Securities upgrade their rating on the DataDog stock to a buy. They said the company appears to be solidifying its position as a clear leader in the observability market with multiple product areas at scale and newer products growing rapidly. They said that some of their recent channel checks were clearly better than expected, including some larger transactions and greater evidence of vendor consolidation. And as a result, they think DataDog has an opportunity to show meaningful revenue upside to the street's Q2 estimates. DataDog does have 31 current analyst ratings, with 18 of those coming in the last 30 days, and it comes in as a strong buy with 25 buys, 5 holds, and 1 sell. The average price target comes in at $147 for an upside potential of over 23%. Looking at the recent ratings down below, a lot of them between the 20 to 30% upside mark. On the low end, we do have our 1 sell rating here at $98, which would be a downside of about 18%. And our street high price target of $165 comes from Needham with an upside of 38%. And for our third stock today, we're moving away from the tech sector and over to the beverage industry with Constellation Brands. They trade under the ticker STZ, currently priced just shy of $250. Year to date, the stock has gained about 4%, but in the last 3 months, it's down about 4%, and in the last 5 days, dropping 2.4%. Constellation Brands produces, markets, and distributes beer, wine, and spirits. They have operations in the United States, Mexico, New Zealand, and Italy, and their portfolio has over 100 brands, with some very recognizable names such as Corona, Robert Mondavi Wine, or Funky Buddha Beer. The company is the largest beer import company in the U.S. measured by sales and has the 3rd largest market share of all major beer suppliers. The company did share their Q1 earnings report just a couple of weeks ago on July 3rd, and as you saw, the stock did drop off after the company had mixed results. They had an earnings beat but did slightly miss on revenue. For their first quarter, they reported earnings per share of $3.57, coming in 11 cents ahead of estimates. Revenue came in at $2.66 billion, and this just fell $10 million short of expectations. The company did highlight that they returned over $240 million to shareholders through share repurchases, and that they had a solid start to the year, reaffirming some of their future outlooks. So we've had a lot of analysts weighing in on the stock following that earnings report. One of them comes from Goldman Sachs, and they say that the recent pullback in the stock price represents an attractive entry point, especially for investors who seek to invest in stocks with a long-term, volume-led growth story and earnings compounder potential. We also heard from an analyst at Wells Fargo who reiterated their buy rating, saying his analysis indicates that the company has been undervalued by the market despite its strong performance, particularly in its beer segment, which saw better than expected sales and margins. They highlighted the company's effective capital allocation as evidenced by significant stock buybacks and reliable profit guidance, which implies confidence in the firm's financial health. Constellation Brands currently has 17 analyst ratings, and all of those are from the last 30 days. The stock is rated a strong buy based on 15 buy ratings and 2 holds. The average price target comes in at $301 for an upside potential of over 20%. Looking at our ratings down below, on the low end, we do have a $262 price target for an upside of 5%, and we have a couple on the high end here at $320 from UBS and JP Morgan, which would be an upside of over 28%. So that is a look at a few of the best rated stocks in the last 30 days. Let me know your thoughts on these companies in the comments down below. I always love hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at. So please make sure you always do your own research and due diligence. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.